What is going on, investors? Hopefully you guys are doing well out there. It is time for another earnings video, and today we're going to look at Taiwan Semiconductor Manufacturing Company Limited. That's a mouthful, so most people stick to TSM or TSMC. The stock over the last year is actually down about 17%, and in fact, we're pretty close to a 52-week low on this one, which is close to about $97 per share. After reporting earnings on Thursday, we'll go over those earnings. We'll take a look at the revenue. We'll take a look at the profits. We'll take a look at this company. I tell you what, if you just look at this company's financials and you just look maybe even like a traditional valuation metric, like a price to sales or a price to earnings, everything looks pretty darn good with this company, quite frankly. We'll also look at it from a technical perspective as well. The stock is actually broken down. I'll show you a couple interesting things I'm seeing on the monthly chart, but also the daily chart when we look at TSM. Now, speaking of those earnings, those came in on Thursday. We had revenue coming in at $17.57 billion. That was 36% year-over-year growth. That also beat expectations by $1.3 billion. They also gave us guidance on the upcoming quarter as well. Expected revenues to come in a shade over, or maybe even significantly over, the previous quarter at $17.6 billion, up to about $18.2 billion. On that revenue side, consensus was all the way down at $16.2 billion. So they're coming on not only over that quarter over quarter, over consensus as well. And I tell you what, when we dive into these numbers, we will see this company has exceptional gross profit margins. They're expecting that to be between 56 and 58%, and operating profits of 45 to 47%. Again, when we go through this from a fundamental perspective, I think you're going to fall in love. This company has absolutely fantastic fundamentals. Now, one thing that we have to keep in mind, though, is stocks don't necessarily trade on today's fundamentals. Certainly when you look at this stock, it's near a 52-week low. It has fallen off a cliff, quite frankly. Over the last 3 or 4 months, it was up over $140 per share. Now we're closer to $100 per share. One of the reasons because of that is because we are starting to see at least a leveling out, or in some cases, a slowing of demand for consumer electronics. And don't take my word for it. Take Taiwan Semi's chairman. He said it himself that consumer electronic demand is starting to slow. We're starting to see that with phones. We're starting to see that with PCs. We're starting to see that with TVs, and among other groups of electronics. Now, there's other areas that will help pick up the slack, and TSM could be insulated a little bit differently than the other quote-unquote chip makers out there. If you're not familiar with that, TSM is an actual chip maker. They make chips for all of the largest companies in the world, including Apple, but also a lot of the other chip quote-unquote makers like AMD, like NVIDIA, like Intel. They also make chips for Sony and Broadcom. Many companies rely on Taiwan Semi. In fact, it's probably one of the most important companies when we look at the technology sector. But we do have to keep in mind that demand is likely going to wane a little bit in these categories, as most economies are headed towards recession or at least contraction mode after the large boom that we had during the pandemic, fueled by government stimulus. Now, in terms of a traditional valuation metric, we've got Taiwan Semi here on a price to sales chart. I've got a 10-year view here. We're seeing it was peaking out well over 12 times sales. Now we're closer to 8 times sales. But if you want to see historically, especially going back before we had kind of a major boom in this stock and kind of the semi stocks in general, well, you were sitting around closer to 6 times sales on that one. If this one pulls back to that mark, if this negative trend in the stock continues, tell you what, that could be an excellent spot, because when we get over to these financials, we'll look at them from a quarterly basis here. We'll take a look at the revenue growth. But first things first, we'll look at the balance sheet, and just 2 things that I want to show you. This company has over $40.6 billion worth of cash, over $60 billion worth of total current assets. They have $139 billion of total assets, and a lot of it's tied up in property, plant, and equipment. And as we know, we're looking at Intel's struggles to kind of get funding and get those foundries off the ground. Well, I tell you what, this property, plant, and equipment is worth a lot of money, because there's not a lot of companies out there with the capabilities that Taiwan Semi has. So they have over $140 billion worth of total assets and just $58 billion worth of liabilities. To tell you what, from a balance sheet perspective, it doesn't get much better than that. Now, from a revenue perspective, we talked about they had this $17.567 billion. That was 36% year-over-year growth. But I tell you what's also growing at Taiwan Semi is their gross profit. It was up 43% over the last year on that gross profits. They're just expanding margins over at this company, being able to pass those price increases down to their customers like Apple, like Broadcom, like Sony, and like Intel. Now, in terms of operating expenses, this company has done a very, very nice job keeping that all under control. Is it up year over year? Yes, you do have some increase on the selling general administrative expenses, on the R&D expenses as well. Total operating expenses are up 24% year over year, but when your revenues are up 35%, when your gross profits up 43% year over year, yeah, your income from operations year over year grew 48.7% to over $8 billion. So off $17 billion worth of revenue, after we pay everything other than taxes, we come down to income from operations and we're sitting at $8 billion. I'm absolutely in love when I look at these numbers. I tell you what, if the demand ends up re-accelerating, and it's possible, okay, you could just see kind of a slowing of demand for maybe a quarter or two, and then only to see it accelerate. Again, that's the very bull case argument. Well, I tell you what, this company is very, very well positioned. These are absolutely phenomenal numbers when you look at the balance sheet, when you look at the operating statement, and then obviously from cash flows as well. Paints an almost identical story. You come down here, you got $13 billion worth of positive cash flow. In the quarter, you spent about $10 billion primarily on property, plant, and equipment. Again, these foundries, there's a reason why TSMC is one of the only companies in the world that is doing this, is because they're extremely expensive. Okay, you have to have incredible scale in order to get to this level. They spent $9.3 billion just in a quarter. They're expected to spend close to $40 billion this year just on property, plant, and equipment, but they can afford it from their cash flows. $13.3 billion worth of cash flows, just $10.3 billion mainly on the property, plant, and equipment. They pay some dividends, all things to be considered. Extraordinarily healthy company from all measures. But again, remember that these financials basically factor in kind of peak demand for PCs, cell phones, and all those types of electronics. And as we start to see those consumer electronic demands start to slow, we'll see how TSM is able to handle that. Again, that's not my words. That's the chairman of TSMC saying that they are likely going to slow. Now, let's come over here and take a look at this from a technical perspective. I'm going to start with a monthly chart. And this is like the basics of technical analysis. And some people are going to be like, well, this is too simple, but this is really what technical analysis is all about. You notice here that we have 4 red candles in a row. I've got a chart going all the way back to 2014. It's very rare that you see TSM stock fall more than 4 red candles in a row. In fact, 4 is the max. You get along here and you do see some areas where 4 red candles. So some of you might be saying, well, then green candles must be showing up. And I would argue probably not, because take a look at before these 4 red candles, we have these gigantic green candles. I mean, we're talking about well over half a year on this stock. All it did was go up, and by good measure, right? Consumer electronic demand was hot. This company was well positioned, one of the only companies in the world to kind of service that demand, and they certainly see that from their operating perspective. Not only did they meet demand, but they did a fantastic job flowing a ton of that money down to their operating profits, and they've reinvested a lot of that money back into property, plant, and equipment to continue to service this industry. The company is well positioned, but I just want you to realize we were on an epic run. This stock went in July of 2020 from $56 to about 6 to 7 months later in February of 2021. It was up over $120 per share. Essentially, the stock doubled in just a short period of time. So we are more than likely to see this stock slow down at the very least. I'm going to change this back to a daily view because it gives us a little better view on the sideways consolidation this stock was in. So it made that epic run that I talked about kind of post-pandemic, like a lot of stocks did, and it consolidated between 107 up to about 124, but the high end of the range was up closer to about $140 per share. But it was traded in a tight range. If you drop this red line, the vast majority of trading in TSM from February or January of 2021 up until this last February. So for a year, this stock traded between 107 and 125, and it finally broke. So I have this black line here. We broke through that, and now we're seeing this was support. 107 was very clear support. Okay, the stock really pivoted off that 107 number multiple times over the course of the year, and then once you slice through it, guess what? It turns into resistance. We've hit our head on it once. We tried to hit our head on it again. This is showing a little bit of weakness from a technical perspective. Again, I talked about how on the monthly view, the stock has fallen for 4 straight months. On a daily view, it's looking really, really bad. You have a major steep downtrend here. You got highs here, lower grouping of highs, another lower grouping of highs here. Now, at some point, this starts to level out, but just keep in mind that you do have overhead resistance somewhere here at 107. It wouldn't surprise me if TSM eventually finds some support. I don't exactly know where that is, but instead of consolidating in this upper range from 105 to 125, I could see this stock consolidating between maybe $80 and $100 per share over the next 3 to 4 months as investors start to decide, is this demand over? Is TSM still able to make the kind of margins that they're going to make? Are economies across the world, and more importantly here in the United States, starting to roll over into recession mode? That certainly would be negative for a company like this, and we certainly didn't talk about any of the geopolitical risk as well. This company located in Taiwan certainly is in the news based on what China could potentially do to that country, and if that happens, well, I tell you what, this company would likely lose a ton of investors. So there is some political risk, there is some supply chain risk, there's certainly some demand risk as well. But I tell you what, once that risk starts to fade away, once investors start to digest this, okay, because we're all aware of it now with investors, and certainly this stock is kind of traded on this bad news over the last 4 months. Once it gets digested a little bit more, this is a company that I think from a fundamental perspective, certainly from a traditional valuation perspective as well, is a company you can absolutely buy. If you're looking at these financials, you're looking for a gold medal winning company, I tell you what, it doesn't get much better than this. So I really, really like this company. I like almost everything about it. Right now, the technicals aren't that great, and the demand picture in the next, I would say 2 to 3 quarters forward, not that great, but this is a company that's well insulated from that. The geopolitical risk is always going to be there, so it never would be one of the most gigantic positions in my portfolio, but I could see absolutely owning this stock. I don't currently own it now, but I could definitely see owning it into the future. That was TSM. Hopefully, you guys enjoyed today's video. Be back in soon with more. Good luck with your investments.